Hi everyone and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infonox on Friday the 2nd of September. So we've had some significant dollar strengthening and selling pressure throughout equity markets. So that's affected a lot of the charts we look at, and we're looking at sterling dollar today, we're looking at oil and the S&P 500 futures. So straight into it with sterling dollar. We've had 5 negative closes in a row, 5 negative candles, and it's effectively continuing this move lower, which arguably could be considered to be a bear candle. And if you get that, the measurement of that bear candle, you'd go from there to the low and then project that lower from the rebound high. And if I did that, effectively what we're looking at is a test of the bottom of this downtrend channel. Now we've also got the 1410 mark. That was the post-COVID low. If I get that on the weekly chart, blow out a couple of levels, you can see that post-COVID spike low of 114.10 on cable. So that seems to be where we're coming back to. We've got the RSI below 30, so you'd argue maybe it's starting to get oversold, but look at this. Back in April it got to sort of well below 20, so it's not necessarily stopping yet. Interestingly enough, euro dollar has started to tick higher today. Bond yields have come off slightly, so that should help to support, well, maybe restrict dollar strengthening, but even against cable we're not really seeing that. So it still is that selling pressure that we've got, and selling into strength within this move at the moment, I think, is the way that we've got to play this. You've got lower highs, lower lows, you've got that or any time you break a support, that seems to be becoming a basis of resistance. So you're looking at 1560, maybe a rally towards 1600 again. But yeah, essentially still looking to sell into strength on this cable chart. Doesn't look great, does it? Moving on to the oil price, what we've had is this sharp sell-off in the last 3 days. We've got dollar strengthening, risk negative asset outlook on major markets, so that has weighed on the oil price. And we've seen 3 negative candles hitting that low at 93.25. That's interesting, isn't it? Because that was the reaction low that we saw back in August, and I think that ultimately the chances are you're likely to see oil going lower. I mean, you've got this negative configuration on the RSI, hitting sort of the mid 30s and then ticking a little bit higher today, but essentially it normally goes back towards the low 30s. You might get another downside break of the support, and that might induce a bit of a technical rally. It just seems as though that this is a market that just continues to fall away. Lower highs, low lows. Yeah, you had that sort of initial attempted breakout earlier in the week, but essentially that was a massive bull failure. And I think it's sort of going to continue to test that support at 93.25. Below that, if I put it on the weekly chart, well, we're looking at sort of low 90 bucks area, 90.33, and then you're looking at the mid 80s. So essentially, if that 93 bucks level does get broken, you're looking to the downside of probably 90 bucks. In terms of resistance areas, you've had a rebound this morning. You've got resistance initially at 96 bucks towards 97.20. So 96 to 97.20 initial resistance. If you get above that, then you start to look at technical rally territory again. But essentially, we're still looking at selling into strength at the moment on the oil price. And finally, on S&P futures, well, this is interesting. We've had a bull hammer candle, big sell-off on S&P futures. It's been testing this breakout area of support, which is 39.10 up towards 39.50. That was a key basis of breakout support from back from June and July, and it's tested that yesterday. It did intraday breach it, but an intraday rally into the close formed a bull hammer candle. That is interesting. The market is holding up today. So is this the possibility of a turnaround? As I said, US Treasury yields coming off, US dollar maybe a little bit less strong, certainly against euro dollar. Maybe that helps S&P 500 futures to rebound near term. So let's have a look on the 4-hour chart. You've got the overhead supply consistently coming in. Look at that resistance of 4,015 area, 4,020, which has been a basis of support in the last couple of sessions. Sorry, basis of resistance in the last couple of sessions. But above that, you're looking at 4,100. But let's put it on the daily chart. You can see the importance of 4,080 up towards 4,100. Big resistance overhead. There is the possibility of a technical rally within what is still this downtrend phase. But interestingly enough, that bull hammer does suggest that, or certainly imply the possibility of a turnaround. If today's session is higher, that would add to that possibility of a technical rally. And then you might see, as I said, 4,080 area being tested at some stage. So with that in mind, I wish you good luck in your trading, everyone, and I'll speak to you soon. Thank you very much.